Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro certainly pushing back up a little bit here, as you can see that. And we'll take a look here on the cable. Certainly a bit of a rebound here, but then that's not saying a whole lot because obviously the cable truly fell out of bed over last week. But the the year is a bit impressive here. I mean, coming back, and it's one of the things that we did go in and look into. And you can see here, we're seeing a nice little jump at after hours here in Apple, in Amazon, and indices are up a bit. We'll go and take a look at those. And you can see we've made a run up here to this 11,260 area here. I didn't do anything on Friday. I felt that it was oversold, but once again, I thought Friday was a real mix-up day where we could really you could push them to the upside, you can push it to the downside, and it was easy to potentially get stopped out on both sides. And I think that to a certain extent, that's exactly what had happened. Obviously, the trend was going to be lower. I mean, the push was as we go into the end of the week. Obviously, we're seeing a bit of a rebound. My thoughts had been coming Friday or towards the end of as we got into the session was those that had to sell had already sold. So could we push lower? Because it's the end of the week, possibly, but I just didn't feel like there was going to be a whole lot left. So we did finish lower. There's no doubt about that. I mean, we came kind of rebound a little bit, but you can see the pushback. Now it's just a matter of how much. We can look at technical levels. And certainly we've come up here to this 11,260. You can see that right there, right to the nose. And a pullback, but not a whole lot, but pull back a bit. Take a look here on gold. Gold saw a little bit of a rebound here in Asia, and you can see it's kind of giving that back up. Nice little rebound here up to 1960. Now we've slid right back down. 1953. Look at the ES. Still doing pretty well up here. Let's go and take a look at the economic data. So we do have industrial production, Eurozone industrial production at the top of the hour. And then let me see here. As we roll into, and really nothing appears apparently here in the States, and then roll into the next day. We do have Australian Westpac data and home prices. And then tomorrow we're going to have employment out of the UK and French CPI, Italian consumer prices, German zoo tomorrow, and also labor out of the Eurozone. And we'll have New Zealand dairy prices tomorrow. CPI data out of the UK on Wednesday. Retail sales out of the States here. Canadian CPI. and FOMC this week. They're expected them to be dovish. So you would think that they'll, at least on the bounce wise, add a little bit of support, but it's not like something that they're not already expecting anyway. New Zealand data. Thursday, Eurozone HICP, Bank of England decision. Thursday, along with the Philly Fed, jobless claims usual. And then on Friday, German producer prices and UK retail sales. And obviously, University of Michigan on Friday, the States. So nothing here today, with the exception of industrial production at the top of this next hour. Take a look at the news. Forex. The pound dogged by the Brexit worries and yen looks to Abe's successor vote. The British pound flirted with a 1.5-month low against the dollar on Monday on fears about the no party choose a successor to Prime Minister Shinzo Abe. The British pound ticked up slightly in Asia to 28.19 after having hit 27.67 on Friday. It's slow since July 24th. It has lost more than 4% so far for this month, the worst among the G10 currencies. Against the euro, it slid to a 5.5-month low of 92.90 pence. The pound was under pressure from fears that Britain will end its post-Brexit transition period with no trade agreement. London explicitly acknowledged last week that it could break international law by ignoring some parts of its European Union divorce treaty, prompting a rapid rebuke from the EU chief executive. Former Prime Minister Tony Blair and John Major said on Sunday, Britain must drop a shocking plan to pass legislation that breaks its divorce treaty with the European Union in a breach of international law. Japanese Cabinet Secretary Yoshida Suga is poised to become head of Japan's ruling party on Monday and Prime Minister on Wednesday, succeeding Shinzo Abe, the nation's longest-serving leader. Because Suga has long been a loyal aide to Abe and has vowed to continue his policies, few market players expect radical changes. The focus on the lineup of the cabinet as to whether he will call a snap election, said Minoru Uchida. He says he is willing to continue and advance Abenomics, but it's questionable how much advancement he can make. The euro has firmed after 3 straight days of gains to 1845. The common currency was supported after the ECB showed no apparent signs of stemming the single currency's appreciation. Still, it faces an uphill battle in tackling the 120 barrier, with investors wary the Eurozone policymakers may want to see the currency strengthen much beyond that level. Some Eurozone countries, such as France and Spain, are reporting rises in coronavirus infections, in contrast to falls in the U.S., clouding the outlook for the economic recovery. The dollar's index against a basket of currencies stood a little change at 93.31. We focus on the Federal Reserve's policy announcement on Wednesday. Expectations of further monetary easing by the Fed have been a drag on the dollar. The dollar index has lost more than 4% so far this quarter. The Fed announced last month that it has adjusted its policy strategy, knowing that it wants inflation to average 2% over time, but some analysts say markets have gone too far in expecting further Fed stimulus. Having set aside yield curve control as a near-term policy option, the Fed does seem to have an operational consensus on how to use a balance sheet. New York-based strategist Standard Chartered Bank wrote in a note, this may disappoint investors. And lastly, Eurozone yield steady after dovish ECB comments and before the Fed. The Eurozone bond yield steadied in early trade on Monday with benchmark German yield close to minus 5%, 0.5, or 0.5%, I should say, as traders digest last week's dovish tone from the European Central Bank's policymakers. The Positive mood across the equity markets on Monday, largely on the back of renewed hopes for a coronavirus vaccine, did not stir Eurozone debt markets with moves in yields small and contained. The Eurozone yields had fallen at the end of last week after ECB economist Philip Lane and French Central Bank Chief Francois Villeroy Decalte heightened crisis from a strong currency known clearly mattered positive because it curbed price measures. That was after the ECB took an unexpectedly relaxed stance on growth and inflation at its regular policy meeting. Although both although EGB yields and spreads to German bonds have returned to their pre-pandemic levels, the information we get looking at the break-even inflation rates confirmed that action by the ECB is still needed in order to revive the investor inflation expectations. The unit credit analyst noted that 10-year German yields, bond yields, at the same level as it was in February before the coronavirus pandemic roiled markets. The 10-year break-even inflation rate is 10 basis points lower. So with that, let's just go on and move into the analysis. So the euro posted a medium-legged doji on the weekly chart. The pair is open to a pullback, but it's managed to slightly close above the prior week. A move above 120 should spark some real buying. Resistance will be 1952 with support at 1713. So we'll take a look at how it stands here on the weekly. So you can see this medium-legged doji, but you can see we closed slightly positive compared to the previous week, and you can see we're starting to push up again. We'll go and move into the daily. And my thoughts are, like I said, it continues to push higher here, and just when you think it's gonna, turn around and roll out of bed, it turns around and pumps up in here, and it does gun the stops. Now, this is ECB, but we had seen this and it looked like it was going to fall, and then it came back and kind of stopped some people out here. ECB, they really ran them up here above 119, only to see this thing sell off. But look at the way it's coming back. Now, for immediate support, it's right here at 1870, but the trigger will be at 1952 right there. You get that, and they're going to be off to the races. But I guess for immediate resistance, 1870 will give it right here. You see this low here? That'll work as a pivot to push them further. So it's going to be actually 1885 on the upside. And for support, it's really just going to be all the way down to here, which is going to be 1769. Onto the cable. Cable finished the past week near the lows. Key support level will be 27.45, but you're pulling away from that. And that should find bids with resistance coming in at 28.78. You can see this level right in here. All right, there, importance of 28.78. Look at that. And on a break lower, 27.45. We'll move on to the Aussie. Now, the Aussie appears to have stalled in the 73-cent area. A slide back has the potential to 71.59 with immediate support at 72 cents and resistance at 73.08. And on to the Kiwi. The Kiwi, just like its cousin, appears to have stalled in the 67-cent area. We're pushing right there. Resistance will be 67 even with support at 66.01. So right there. And 66.01 remains the same. Nice little rebound. I'm not sure how much further it can squeeze. Hard resistance would come in right there at 67.20, but I'll stay with the 67. On to the dollar CAD. So the dollar CAD is trying to establish a bottom. Support is going to be 30.96 with resistance at 32.34. That would be true. Hang on. Because we're just kind of like in the middle of no man's land. You can see it right here. Look at that, how we get this big move, pull down here, and then we just get tighter and tighter and tighter. On to the dollar peso. Boy, there's no reprieve. Holy smokes. Sheesh. The dollar peso continues its slide. Next level support comes in at 21.08. Immediate support will be 21.18 with resistance at 21.37. Well, we're there. So we can't go to 21.08, but immediate support is 21.18. Holy smokes. Followed by 21.08. And 21.37. Although at this point, it's not even looking very good here. It's going to be 21.33. Onto the dollar yen. The dollar yen is motionless for the time being. Resistance remains 658 with support at 566. No change there. And onto the cash dollar index. So the dollar index has come off the lows, but not to the extent one would expect in light of the U.S. equity slide. Resistance remains 93.89 with support at 92.84. So really a disappointing bounce we've seen here. And onto the cross rates. So the New Zealand dollar, Japanese yen has rallied in the 71, I meant to say stalled in the 71 cent area. With an opportunity to pair back, resistance is going to be 71.05. So far today's rally looks like it went just there. With immediate support at 69.98, followed by 69.54. So the high was 71.04, not bad. We had 71.05. Let's go move into the euro yen. So the euro yen is struggling at the 26 cent level. The pair remains bullish. Resistance will be 26.43 with a break above, finding new buyers. Support will be 25.20 followed by 24.60. So 26.43 for resistance. And support will be 25.20. Onto the euro odd. Now the euro odd is rudderless for the time being. Resistance is going to be 63.40 with support at 61.82. And we're just not going anywhere. We're just stuck. Look at this. It's we are just literally dead in the water. Look at that. Let's go and move into the euro Kiwi. So the year Kiwi spent the last few days closing up, then down. Immediate resistance is going to be 78.42 with a consecutive daily close above 78.80 to bring in buyers. Support will be 76.37. And on to the Aussie. The Aussie yen is stalling above the 77-cent area. The pair is open to a pullback. Resistance will be 77.76. So we're obviously giving it a little bit of leeway here because you can see how it's been pushing up in here. But it's stalling above 77 cents. So resistance will be 77.76 with immediate support at 76.47, followed by 75.67. And really, the take on this is that you see how we've pushed up these upper levels right here, but look how we closed weaker. We pushed them a little bit higher, closed a little bit better. Look, we're just stuck in the rut right here in 77 cents. But you don't want to put your stop so close they goose you right out, and then they come back down. So it is open and sliding back. It's going to have to get above that 77, 76 right here. So it's a little bit further than we normally go with, but I think in this situation it's well warranted. And on to the guppy. The guppy has been in a sustained slide. Support to start the week will be 35.26, followed by 34.66, and resistance will be 36.71. So the sterling odd cascaded lower before finding buyers at weekly support level 74.85. Oh, gone it. What the shit up? The sterling odd cascaded lower before finding buyers at weekly support level 74.85. The pair remains weak. Support will be 74.85 with resistance at 76.45. So, yeah, right before I started the webinar, my mouse, well, I thought it was a mouse that froze. And I actually got a wired mouse after that last time, but it wasn't it. Then I got a message on the TD Ameritrade saying a program is slowing your system down. Keep on going, which I did say yes. So I'm going to reboot everything after the webinar. But that's why when that thing showed up, I was really going to be steamed. Anyway, resistance will be 76.45. This thing is really falling out of bed. Holy smokes. And that'll do it for FX. We are seeing the indices come back in a bit here. Interesting. Remember, we had just gone up to 7260, and we actually the high was 7260. I meant 11261 right there, which was came in right there. She had 11260, and then right now we just went up and ticked this off at 11, like an extra 5 ticks handles, and look, we've turned around and just rotated lower after doing that. That was kind of interesting. So hit here, came back to tag that. You see, take out the stops above it, take a dip, post a little Greystone Doji. But there wasn't anything, there wasn't like a whole lot of volume to say, but you can see here, they're taking those profits on that run here. But that'll be it. And thanks for joining us here on the European Crossover webinar. And I'll get the bias chart posted. And thanks for joining us.